I blew out my back squatting 315 the other day, but I'm going to make this video for you anyway, because when it comes to Bitcoin, you need to hear what's about to happen and what's going on. You guys understand how super macro distribution works at this point, and you understand when algos get in that lockstep sequence, how fast things can get bad in such a quick period of time. When an algorithm flips to super macro distribution, you're talking about distribution on the highest time frame, weekly, monthly, daily, etc. And with that comes exaggerated percentage moves to the downside, 50, 70, 90% drops, all backed by the derivatives market to make sure that that happens. And this only happens on POIs. Excessive amounts of shorts are hidden within swaps, are also hidden in collateralized loan obligations. They use puts, buying puts on the options chains, that's negative delta. Dealers delta hedge that by shorting the underlying security, which pushes that security further and lower even faster. They use spoofing. They use routing volume, buying volume, off the exchange into a dark pool. There's multiple ways that they go about making sure that super macro distribution and macro distribution happen at any moment in time where the POI deems it necessary. Now, the main difference I want you to take away from this is that Bitcoin is running super macro distribution after reaccumulation. GameStop is running super macro distribution after reaccumulation. AMC, for example, is running super macro distribution straight from the top. That's why it's down 99.6%, about to be down 99.8%. The silver lining here is that because of reaccumulation, no matter how bad things get, you will bounce at super macro demand. The only problem is that could take another year and 3 months. The markup phase after that is going to take freaking forever. You're talking 3 to 5 years just to even make back what you dropped during this super macro distributed phase. So let's get hot today. Enough of the jibber jabbering. Let's talk about Bitcoin and where it's going in the next year and a half. Babes, here's your all-time super macro Bitcoin chart. What is the first thing you see from a Wyckoff perspective when you look at this chart? Reaccumulation, okay? This is the exact schematic GameStop is running, nearly to a T. I don't have to remind you that GameStop ran 18,000% during the meme frenzy back in 2020 and 2021, and whereas Bitcoin's previous move, 13,000% leading into your COVID distribution and your midpoint of your reaccumulation schematic. Now let's zoom in a little bit here. What is the first thing that catches your eyes looking at your super macro schematic back to 2018? Demand zone, demand zone. Okay, these are your two most important liquid zones where the most price discovery happen on both the buying and selling end. These are your magnets for where the stock is going to distribute to on your super macro time frame. Now, your biggest issue is that 20K is 70% away from your current drop, meaning you would have to completely capitulate on phase D and phase E on your super macro timeframes in order to get you to 20K from here. We know that's not happening. The market is not crashing anytime soon. There is no disastrous Bitcoin news that is going to come in. Trump is pro-crypto. Tom Lee is underwater, something like $6 billion right now. They're not going to let these guys get blown out completely because remember, they need people like Tom Lee and Trump's sons and whoever else is invested in crypto like MicroStrategy to continue to have that credibility in order to push the narrative to get Bitcoin back to this level once distribution finishes. They're not going to take it down 70% from here as you have already dropped from the top 50%. You already did a macro distribution schematic. So they're not going to macro into super macro it on an asset class that is this large. It just doesn't work that way. You could do that on a meme stock where they could reverse split a stock and then short it 80, 90%, but that'll never happen on Bitcoin. The market cap is way too high. There are way too many institutional investors, including BlackRock. So simply put, you will get your super macro distribution percentage fractal to be 70%, but it won't be until you at least get a nasty double top on Bitcoin as a whole. So let's start with the absolute basics. You know where the demand zones are on the super macro. Let's take fibs and figure out where we're stopping. Keep your percentage marker there because that's what I want to look at when we figure out exactly where our fibs are. Let's do super macro first. Very simply, and this is what I see is most likely, your 382 is usually where your sequences will end on micro, macro, and super macro distribution. It is where the algorithms love and favor the most when it comes to ending a sequence in full. Then let's double up on this and just go macro. Same fibs, okay? Where's your golden pocket? Right in your 382 zone. This is where you're going to end up when we're all said and done, okay? That 28, 24, 30 level, that's your range to buy Bitcoin at the absolute bottom. But before we get there, you have to supply test first. Remember, every single time the algorithm is bouncing between supply and demand zones, it's filling up on fuel. Fuel works in two different ways. It's not like just in a car where you get gas and you move forward. Imagine in a car, you needed specific gas to move forward, demand, and specific gas to move backward, supply. In order to reach this demand zone, you have to punch through specific buy zones that are all the way leading downward. There's price discovery this entire way. In order to punch through this demand zone, you need more gas on your supply end. So while Bitcoin may be in a spot here where it can bounce a little bit, you still need to pull a little bit lower before you even reach that next supply zone. So this is what you're looking at. 57K, something like that in the next 3 months, because that is, if you look at sequence-wise how fast this is moving, you'll get 57, 60K by basically May 5th, at probably the latest. So you're looking here. Once you get there, you supply grab again. This is your UTAD. Remember, you guys know Wyckoff. If you haven't, please watch my Wyckoff videos. Up thrust, then you get your up thrust after distribution. Usually your UTAD touches new supply because that stops out all your stop losses in that area that are currently sitting above 129K, right? This is also where the algorithms stop out any put buyers that loaded heavily in this area. It's a stop loss on. It's basically what your UTAD is. That's why it breaks supply. Once it does, and you get to that 145K range, you can be confident that that is, my friends, when super macro distribution begins. Now, your 70% drop, that is standard for super macro. It can extend to 80, no problem. Remember, your golden pocket on your macro is right here. So a 75% drop in Bitcoin leading into basically Q1 next year is not something that is off the table whatsoever. It is completely realistic. You need to make sure you are trading this right. You need to make sure that your portfolio is aligned correctly in order to withstand an 80% blow on a risk asset this large. Do not be over leveraging or over allocating, and do not be listening to anybody on CNBC telling you when to buy or sell ever. The chart is dead clear with your supply and demand zones. It is dead clear on what the timing is, and it is dead clear on where this is going when the super macro schematic ends its sequence. I've said this before, and I'll say it again. When multiple POIs are snubbed on the macro, you can immediately assume with a very, very high likelihood that you are in a distributive sequence. Bids not getting caught over and over and over again in windows of strength ensures that you are going to continue lower, and not in a stair-stepping fashion, in a violent fashion. The entire purpose of distribution is to scare you out of your position. It is to make the drop seem worse than it will ever be. It is to make sure that you hit the fucking sell button when you are at the absolute bottom and do not hold that asset. These algorithms aren't here to give you money. They're here to steal it from you. So in the near term, watch Bitcoin as it gets to 60. Once it gets to 60K in that range by May, you will see an upthrust. Okay, after distribution, when institutions are offloading their position and the algorithms are marking up because retail is chasing that stock, you get to that 130, 140K level. That is when super macro distribution phase D and phase E hit. They will be violent as fuck, and things are going to get nasty from that point forward. Okay, Bitcoin is not the best asset for you to invest in no way, shape, or form. You should not be looking at that like the end all be all because fiat money and Keynesian economics and all that bullshit. Bitcoin is a solid asset. You can make solid returns on it, but there are plenty of securities out there that will make you thousands of % returns in the meantime while you watch Bitcoin finish distribution and mark up over the next 5 years in fucking slow motion. If you guys have any questions, you let me know. If you want to be in the Discord, hit me in the DM. Love you. Have a great day.